All right, everybody. Happy Monday. Welcome to AAA. This is Chris Pulver here, asking analyst, and joined by my pal and partner, Tyson Clayton. What's up, Tyson? How are we doing today? Happy
Hey,
Monday.
Chris. I'm doing good. It's good. It's been a couple weeks since I've been with you on these sessions. You've been solo, been doing a phenomenal job. It's good to be back. I was in Florida all last week. I would love to say I was in Florida for vacation, but that wasn't the
It was
deal.
not pleasure. It was not
It
pleasure.
was not pleasure, but it was good to be down there. It was the first time I'd traveled really in about 16, 17 months, Chris. So
Yeah.
I typically get on a plane once every, 2, 3 months. And it had been about 15, 16 months before I got, since I got on a plane. So it was good to get down there, good to see everybody, but I'm glad to be home in the swing of things. So,
Yeah. No, I know it was a super busy week. We missed you in EOD, but we had an awesome week. We had some great plays. I mean, you and I connected every day that we needed to, but the live session students didn't miss a beat. We had some great trades last week, so I want to talk about those today in AAA. So this week, here we go, Tyson. I'll bring up the charts here. Tyson, let me share my screen with you so you got me in real time here. Give me
yeah,
1 second for you. There we go. Let me know when you can see my screen.
got it.
Good, be good? Okay, perfect. All right, and then Tyson's moved over. All right, we're still good on the AV. Okay, so one thing I noticed this week. Let's just look at some FANG stocks for a second. Here's Facebook. Look, I think that I was saying this for the last couple of weeks, Tyson, as we started, the timing of wrapping up April, right? Pre-summer push, April, May, a lot more volatility. Typically, we see some anything that's sideways or stuck is going to break out. We see trending markets more commonly in Forex. We see some breakouts and volatility in stocks. We've seen I know that we like to look for these kind of overbought, oversold conditions, capitulation moves, and I'm seeing a bit of that on the major indices. The S&P has rallied, 11% since March. The Dow Jones has rallied 11% since March. The Nasdaq's rallied 12% since March. The IWM has rallied, 4, 5, 6%. We have some signs of topping patterns. I think it's interesting to see, April was just pushing, drifting. A lot of low volume out there. Now, I'm looking at something like Facebook. Thoughts on Facebook, again, and all these earnings have been like crushing it, right? For the most part, like financials are very healthy, tech very healthy, but technically speaking, it's like we're gapping higher. I just feel like some tops are likely. What are your thoughts?
Yeah, it's so interesting. And Facebook is an interesting stock because I just had a conversation um, yesterday with a buddy of mine who is in the mortgage industry. He's a pretty big player in the mortgage industry, and he has a bunch of buddies who do a lot of Facebook advertising. And there's some
Yes.
changes that are happening that he's like, "Hey, I think Facebook's going to be in a world of hurt soon." Because some of the
Interesting.
changes with
Was
advertising and Apple and all
I was
this
going to say
stuff.
with Apple, like the new policy
Yeah,
updates, right? Yeah.
yeah, and
Yeah.
so it'll be interesting. But beyond even just Facebook, it's so funny. It's like the market is gonna go through one thing that everybody that I talk to is on the same page about is the market is gonna go through a sustained bear market again
Yes.
eventually.
Yep.
But we've been saying that since I think a
Since
lot of a lot
COVID.
of us have been saying that since like 2012,
Yeah,
right?
I
And
know.
we've
Yeah.
got a bear market since then. We've got two, I think, but
Yeah.
we have not had any type of sustained bear market. It's been
Hmm.
literally just flash down,
V
rally up.
bottoms. Yep.
Yeah,
Yep.
and that's because there's so much money supplying the system. Now, but here's the deal. This is the danger is that we get those flashes down, rallies back up, and people get complacent. They say, "Oh, it's never going to happen.
Right.
It's never going to happen.
Right.
It's never going to happen." Same thing happened in 2007. Oh, yep, it's never going to happen. Market just goes up. Happened in the housing market. Market just goes up until it doesn't anymore. But here's the key to it all, as you know, is the timing aspect of it. We all
Hmm.
know it's coming,
Yep.
but when?
Yep.
And so the best plays that I know of, Chris, and the things that we're really starting to talk about in equities on demand is um, I don't know when it's going to happen. So how do we, if it does happen in the next month or two, how do we take advantage of it? How do we make money? But at the same time, if it doesn't happen, how do we continue to either preserve capital or still make money on the
Correct.
upside?
Yep.
And so the ways that we're doing it, and the best advice I can give anybody is like try to be directionally neutral.
Hmm.
try not to take a directional bet, because I look at a stock like this and I could say, man, technically speaking, we could have a breakaway gap. We could be running to all-time highs. Facebook, fundamentally speaking, now in the future with the Apple stuff, it could be overvalued, but as of right now, fundamentally speaking, it's not an overvalued stock, especially with the stock that has projected growth of 25-30% on an annual basis, trading at a 25-30 times multiple. That's actually not a bad deal.
Right.
So fundamentally speaking, it could go way higher. However, man, it's kind of priced for perfection right now. It is sitting at all-time highs. It's like, okay, it's maybe a little overdone. So what do? I just created a fundamental reason why it could go higher. We could have a breakaway gap like that last time it gapped back in September. It gapped up, really didn't end up pulling back, and for a few weeks
Right.
before it actually had any type of sustain. So what do? From my perspective, let's try to trade in a stress less way, which is, let's not try to pick. Let's not
Right.
try to bet on direction. Let's try to find those stocks that are in low levels of volatility, that are maybe sitting at or near highs. This is one of my favorite trades, when we're sitting at or near highs. This can work in any range. You could be sitting in the middle of a range, below, at the low of a range or high of a range.
Right.
But some of the best happen at a high range, because at a high range, especially if we've gone up there fast, like if price went woo fast,
Mm-hmm.
like a month and a half, 2 months ago, and then it's consolidated around that top. Typically, what happens is, if we can get into what's called a volatility squeeze, we're either going to have this blow off top and we're going to end up going aggressively up, or we're going to come back down and fulfill some of those big demand levels that were left below. And so what I like to do at that is, I like to do what's called a straddle.
Mm-hmm.
We can then turn it into a strategy called an iron condor, essentially just saying, I don't know what the market's going to do. And that's really my thesis right now. I have no clue, guys. And you're like, wait a minute, you're a professional, shouldn't you know? Yeah, but in this environment, it's really tough to know. So how about this? Let's not guess. Let's just position
Right.
ourselves where, if the market falls, we make money. The market rallies, we make money. If it goes sideways, that's our worst scenario, but there's also other ways we can manage. Even if it goes sideways, we could try to manage that into maybe a loss, but a small loss. And so that's the strategies that I'm using, and that's the strategies that we're trying to deploy in the equities on demand, Chris.
Yep. Can you see me drawn on the screen, Tyson? Just kind
Yep,
of just the
that's
different
exactly
scenarios
it.
of lows to highs and stalling, and highs to lows and stalling, and in the middle of volatility and stalling. But again, it's a good thing when you have this contraction, because right now we're in, until I would say, if this was like, June or July in the heat of summer, when usually things are quiet, like right now Tyson, we finished up April. It's a new month. I was not surprised to see things starting to rock and roll. There was a lot of volatility in Forex this weekend. I had some flash moves on Aussie pairs. It was like Aussie New Zealand spiked up to 108. We had some great fills this morning. We had some power play setups in our equities on demand. We just have some good movement, and May should be a strong moving month. Whether it's up, down, or up or down, we should have some decent movement. So, like you said, we are positioning ourselves for, as long as price is wanting to go somewhere, which is what we're betting on. We're betting that price is willing to go somewhere. That's how we're going to make our money. And I feel a lot more confident with that approach than we have to be, betting with the right, risk reward, and also right on direction, which sometimes technically in stocks especially is not exactly easy. Like we're in the heart of earnings season right now. We've seen, companies beat expectations by a ton and still have price gap lower, or vice versa, right? Like estimations have been missed and price gaps higher. Again, it's like it's kind of a toss up in how much they move and how quickly they move, how big the gaps are. That's all out of our control. So we're just trying to make, good, conservative, consistent bets, essentially, that we can find ways to be profitable. So
Yeah,
I think
and the
that's a great
hard part
strategy.
about this too, Chris, is that I'll tell you it flat out. Anybody who, Facebook, perfect example. If your time horizon is 3 to 5 years, you buy.
Sure.
You buy. I mean, this is a solid, fundamentally strong stock. You buy. Oh, what if it goes down? Well, keep some dry powder, buy some more.
Yep.
Right? I'm confident
Accumulate.
we're going to be higher in the next 5 years.
Right.
Next 5 months, I don't know, next 5 weeks. You see what I'm saying? So
Yeah.
so that's different. So we're doing, so for me, I think long term, great. I have my long term plays, and,
Mm-hmm.
and and I'm just buying. And what if we're at the all time? Disney's one of my kind of sock away stocks. Oh
Yep.
man, it's sitting at highs. We'll buy more. It's sitting at lows. We'll buy more, and just hold it, and you collect the dividend. You do what you got to do. Um, but again, it's not fun going through. If I start buying right now,
Yeah.
and if you say you have a 5-year horizon and you start buying right now, and the thing gets cut by 30% in the next 5 weeks, well,
Yeah.
guess what? Listen, you said you had 5 years.
Yeah. Don't
Either
change the
be
plan.
convicted about the position or
Yep.
don't take the position at all. And that's the
Mm.
key. But instead, so we've got our long term trades, but instead, I have no clue. What I could tell you is I know where we're going to be in 5 to 10 years. I'm confident Facebook's going to be higher. I'm confident the market's going to be higher.
Yeah.
But in between the market being 20, 30, 40, 50% higher than it's going to be in the next, than it is now in 5 years, we might go through a 40% sell off. I
Yep.
don't know.
Yep.
And I don't want to. What if somebody's retiring in the middle of that 40% sell off?
Correct.
That's the key. And so it's like, how do we take advantage? How do we not position ourselves to have a rally or have to have a sell off? And I would never say, and in fact, I would say this for 95% of the people out there that watch these, you should not be a net seller of stocks. You
Right.
should not go out and try to short stocks. The reason why is because it's a loser's game. You're betting against. Now when you're right, man, it pays off huge and it feels really really good. But you're more often you're wrong.
Hmm.
And so how do we take, if we know stocks do go down too? How do we actually do bet on the downside without being aggressively bet on the downside? And that's when we do kind of our delta neutral or our neutral positions where we don't care where it moves. We just want it to move.
Right. So you want to give one teaser away from today? We're talking about how it
Absolutely.
moves. One setup from today that we really liked, and then we can do some. I want to talk about cryptos for a few minutes. I know you got to go in about 10, 12 minutes.
Yep.
But let's do one from today. We have this kind of directionally neutral setup. I think it's. I mean, the numbers for us are fantastic. The risk reward is excellent. The probability is super awesome. Is it the same one you're thinking?
It is.
Okay.
It is. This is it's hard for me to find a better trade than this right now,
Yep.
Chris. Um, Technically speaking, this is a phenomenal looking trade. Fundamentally speaking, with the events that are coming, so Baidu
Mm-hmm.
is kind of the Chinese equivalent to think of like the Google
Yes.
of of China, right? But it's got earnings in 15 days, and I don't really even care what Baidu does. This is one of those trades where, like, fundamentally, we really don't care. But
Yep.
what's cool about this is we have an event that we know price is going to move. No matter what, price is going to move for sure in 15 days because it has earnings in 15 days. Now, the
Yep.
question is how far is it going to move and where is it going to move to? And some might look at this chart and be like, oh, well, we're sitting low on the curve. We're sitting kind of at a lower price. I believe it's going to move higher because we've got some gaps to fill on the upside and we've got some supply up there. Others might say, no, you're a fool. I think we're going to move lower. For me, I don't know, Chris. I could see us coming down and filling the gap at about 175. I could see us going up to 260, 265, all sorts of things. But I
Yep.
do know we're in a volatility squeeze, which means that the market, you see that price, kind of that chart that Chris drew out, where we get that big flush down and then price consolidates. So that's what happened. We flush down, consolidation. What happens 100% of the time in this scenario, and yes, 100% of the time, is price will resolve itself either to
Mm-hmm.
the upside or the downside. We're at an equilibrium right now. Price does not stay at an equilibrium forever. It then resolves itself and goes to either expanded highs or below or lows. We don't know which one's going to happen. Also, we don't necessarily know exactly the time frame it's going to happen in. We
Right.
do know it's going to happen. We just don't know when. So what we do is we try to say, okay, based on historical responses, when we get in these tight ranges, it typically takes 6 to 8 weeks to resolve itself once we get what's called kind of a squeeze. But this could actually happen faster because we have the earnings coming out in 2 weeks, two,
Mm-hmm.
3 weeks. And so what we're looking for, Chris, is we're not taking a direction on this. I don't care if it goes up or down.
Right.
What we're looking for is we're looking for price to move up or down. It doesn't matter. And we have used calculations based upon the strategies that we've created. We have a strategy called Master Blaster, and the strategy essentially helps us calculate or helps us see when these technical parameters are met in the squeeze. It also helps us calculate on what our expected ranges are going to be. How far do we expect price to move? And we're expecting price to move pretty big, but we're expecting price to move well within its normal distance it typically moves.
Right.
So, as an example, Baidu typically moves. Let me go and pull this up
I've
here
got it.
real
I've got
quick.
it right here.
Yeah.
Yeah, we'll go Baidu right here. I'll pull up the chart.
So, if you think about this, in any given month,
Yep.
Baidu moves 72, almost $73
Yep.
in any given month.
Crazy,
So
man.
what we're doing is we're taking that. So that's not even including the months that have earnings. That's
Yep.
not including the squeeze months. That's just every month, incorporated. Some that means some months might move $100. Some months might move $50. But on average, $73. So here's the deal. Um, what we're looking for is we don't. I'm not going to be too greedy. I'm not going to say, hey man, let's go for $73 target in the next 5, 6, 7 weeks. But I do think we can get 60% of that,
Hmm.
right?
Hmm.
Once we start to move, the movement's going to be aggressive in one direction because we're in a squeeze. So what we do is we take 70% or 60% of that movement. So we're looking for if the ATR is 72.95, we're looking to get into a trade and have a target of like 43 to $44. Well, we found a trade that we can get into for less than $21, Chris, which means
Hmm.
that I believe this trade gives us, this is going to sound crazy, guys, because the math doesn't make sense.
Yeah.
We get in a trade for $21 that gives us a profit potential of $22. And I believe we have about a 65 to 70% chance on that trade. And again, I know that math doesn't make any sense. But I'm telling you, based on history, that's the trade. And honestly, like I said, Chris, I don't know if I can find any better trade right now. There's about 3 or 4 that are similar to this that are
Hmm.
out there right now. So if you know where to look, traders can actually set up trades where market tanks down, you make a bunch of money. Market rallies up, you make a bunch of money. You don't care. You sleep better. And that's a question I want to ask you, Chris. If you have a trade on like this,
Hmm.
are you sleeping better than what you would sleep if you took a bullish or bearish direction on this trade?
Absolutely. I
Yeah.
mean, yeah, because and the same thing on earnings plays. It's like, we've had a lot of earnings plays where we have to close out the call side, close out the put side, and know that, the other side that's open is either we're trying to give it some time to come back and, make us a little bit of money or improve its position, or we just end up closing and it's a washer. I mean, or
Yep.
we make money on the whole thing. So this is the type of trade where we did it today. We did it today in class in equities on demand. It's still available. So if anybody is interested, you can obviously reach out to us and get a hold of equities on demand. Join Tyson and I every single day. But this is the type of trade where the odds of us losing the $21 is
Oh, is
slim to none.
yeah.
And the odds of us winning it, and I even put the limited today, Tyson. So I know we're going after like a $43 limit, like a profit level. I went ahead and say, you know what, I'm going to take 90% of that, and so it's like $39. I am very confident that with and again, these are on calculations of like 60% of what the market's actually willing to do. So
Yeah.
it's really like on all fronts, it's a very conservative estimate of what the market is going to average. So
So if
that
you're wondering real fast, if you're wondering, well,
mm,
wait a minute, you do have $21 of risk if you take the trade at $21. Well, let me explain what has to happen for us to lose $21.
mhm,
By June 18th, the day that closed, that Friday, June 18th at 4 p.m. Eastern, price has to close exactly at $210.
yep,
Ex- on the penny,
mhm,
$210 on Friday, June 18th. If that happens, we lose 21
right,
bucks. The chances of that happening and us not managing this trade, us not doing anything until that point
right.
is it's basically zero.
Right, because if price in any way over the next 6 weeks, if we go down near this level, we're going to be managing part of that trade. If it goes up to this level, we'll be managing part of the trade. So I mean, it's not a sleeper. We got earnings in about 2.5 weeks, and there's a lot of volatility on the stock. So I'm excited for it. I think the profit factor for us is fantastic. So anyway, that's what it is. BID. If you want to learn more, join us in Equities on Demand. We got the trade ready. We took it today. We got filled on it today. It's still good. Tyson, there's plenty of time in this one. It's still good probably for the entire week.
It
You know?
is. It
Yeah.
is. And the biggest takeaway that I want traders out there to understand that are watching is it's our way to bet on a market crash without needing a market crash.
Yes. Right. And
And it's
and
our way to bet on a market rocket ship to go to the moon without having the market to go to the moon.
yep. So
Um,
we don't need that. We don't need to be as dedicated to the one
yes.
directional bias to be correct. We can be correct as long as there's movement, which we're thinking there's a high probability of, and we're conservatively bracketing that movement. we're going to hit a lot of profit targets by doing that type of trade for
And I'll
sure.
tell you this, there are some really, really smart, great traders out there looking for the market to rally up another 15% before the year end.
Yep.
There are also some really smart traders looking for a market crash. Somebody's going to be wrong.
Yep.
Either way, this trade like this makes money.
Yep. And that's my favorite because I don't want to have to be that trader. I don't want to have to be that trader that has to sit and wait for 2, 3, 4 years to tell you I told you so. And meanwhile, you just suck win the entire time. When instead, when you're in the trenches actually trading like we are, we can just try to wait, try to grind out money this week and next week and this month and next month and just keep taking good trades. These are great setups.
Yeah.
All right, man. I only got a couple more minutes with you here, so let's
Yeah.
do. Do you have anything in cryptos? I know that Elon Musk hosted SNL this weekend. I'm sure that bothers you because he probably talked about Dogecoin. I didn't watch SNL. I'm going to check it out tonight, but I'm sure there's something that's all memed up and trolled up and stuff. But anyway,
You know,
any cryptos for today? Otherwise,
crypto
one
is
currency
it's
pair.
so interesting.
Yeah.
I actually just saw. So I'm a part of a bunch of Facebook crypto groups, right?
Yep.
And so I get these alerts and stuff like that. People, 98% of the stuff that's posted is just junk.
Mm-hmm.
Sometimes there's interesting things, and there was a super interesting post that happened last night actually, and it was. Let me see if I can find it here. Yeah. So check this out, and
Okay.
I'm just going to run through these numbers real fast.
Okay.
So 2017, this was yesterday's price, right?
Okay.
2017 price of Bitcoin was 1485. 2018 on yesterday's date was 9122. So it was like a 5 to 6 times return. 2019, so 2017, 2018 price went up 5 to 6 times its
Mm-hmm.
price. 2018 to 2019, it went from 9,100 down to 5,400, about a 45% sell off or
Okay.
so. 2020, it went from, so then I said, okay, compare 2020. So it went from 8,900 in 2020 to
Mm-hmm.
56,000, about a 5 to 6 times return.
Yep.
What happens on the third year? Well, 17, 18, we had a 45% sell off. You know what that 45% sell off did? It brought us back down to the mining cost,
Yep.
Chris.
Yep.
So what I'm saying is, it's just like the stock market. Is Bitcoin going to 100 grand? Yeah, absolutely. Yep. In the next 1, 2, 3, 4 years, we're going there or higher, much higher. But are we going to see $25,000 anytime in the next 12 months?
Probably.
Maybe 30, I'll say 30,000. I'll say this, as of right now, the information that I have right now, I think we see 30,000 before we see 75,000.
I think that's super interesting. And I want to say this, Tyson, we've talked about this. We had a great anniversary session for market traders. Was it last week?
Yeah.
Was it, man, that was,
Last Tuesday.
man, it's such a busy week, dude, to have that on Tuesday. We were talking about this with crypto. Is it possible that Bitcoin does nothing other than go sideways? And maybe we have a range from like 45,000 to 60,000. And does that sit sideways enough and long enough to let those mining costs just keep elevating, keep elevating, keep
absolutely
elevating,
could
yeah.
Yep.
So
That
maybe
could
we
happen.
don't go down to 30,000, but we don't go anywhere until
Yep.
those mining costs are sitting right around that major support.
Yep.
Yeah, because if it stretches and just like you said, if it stretches up to 75,000, 80,000, 100,000, it still has the potential to fall all the way back down to those mining costs,
I
wherever it
don't
is.
know that's possible, but I got to tell you, Chris, I don't think it's plausible. And the reason why is because I think back in 2017,
Mm-hmm.
we went through a boom and bust cycle, but I got to tell you, I think we had stronger hands holding in 2017 than we have today.
Stronger hands holding what, the downside?
More conviction, there were early high tech adopters that
Yes.
believed in this thing long term forever,
Yeah.
and they were able to hold through. I think there's a lot of novice, boneheaded moontards out there that just don't know what they're doing.
Hodlers. Yeah. Yeah.
And we start breaking some lows, they start panicking. So
They start dumping. Yeah. Yeah.
yeah, just based upon who I think is holding, which is more of the not so smart novice trader.
Mm-hmm.
I don't know if we're going to go sideways. I think that doesn't feel bad for them, but are they
Yeah.
going to get impatient also?
That's true. Yeah, because look at how impatient traders were in 2019 when it was sitting at these great lows. It's like if you're going to buy it, this is minimum downside to who knows what upside. It's like if you waited, and that's the difference is not everybody is coming into trading with the foundation, the knowledge, the education to know that patience tends to win out. Patience and discipline and good equity management. That's how people make money in trading and investing. It's not coming in and getting lucky. It's not coming in and hitting the trolling stocks and following Elon Musk and following Roaring Kitty and following GameStops and AMC's. That's not how you make money. That's a great headline. That's a great story. That's fun for today, but that's not sustainable. And those are few and far between. So that's like one of my favorite comedians, Mitch Hedberg, talked about when you see a casino, right? You see a casino billboard, it's like shows these people holding bags of money. They're like, well, that's what never happens, right? So that'd be like showing a person at McDonald's, a billboard at McDonald's, and somebody choking on their burger. It's like that never happens. So in trading, it's like you hear about all these tiny little accounts holding call options, striking it rich. It's like that's not real. Like the probability of that happening for everyone that's like, I want to get involved in trading, for that to happen to me, it's like, that's why there's a lottery, right? That's why there's Mega Millions. That's why there's Powerball, because you're playing with crappy odds that way. So if you really want to learn how to trade, you really want to do this and have some sustainable trading experiences, then that's why you and I are doing this every single day.
That's
You know?
exactly. And the last thing I'll say this, I got to jump off, but I'll
Yep.
tell you this: Bitcoin is just like the stock market, just like Facebook. I'm a long-term bull on Facebook. Facebook's a great long-term buy. Bitcoin is even better. That doesn't mean Bitcoin's not going to get cut in half.
Right.
So if you're looking out 2, 3, 5 years from now, you buy and you
Yep.
just let it do its thing. If you're not somebody who can sustain a 30, 40, 50% sell off, then you might want to buy some now, but you better prepare for that sell off and maybe stagger your buys.
Yep, I agree. And we've talked about that a lot. If anybody's interested, actually, if you're watching this session or watching the recording, if you're interested in getting a hold of our anniversary event or anniversary recording, we had an amazing 4.5 hour session. Tyson and I, Gary Fichardt, Jared Martinez, Aaron Hungster was hosting. We did cryptos, we did stocks and options, we did Forex, 4.5 hours, intense. Showcase everything we do. So I know you got to run, Tyson. I just want to do one currency pair. So if you need to jump, I get it. I'll see you later, man. You and I got to
Yeah.
connect
Hey,
later.
everybody.
All right.
Thank you. It's great to be back, and we'll talk to you guys next week.
Yeah. Thanks, Tyson.
Thanks, everyone.
All right. So I'm going to just finish up here with one setup, dollar index, and take this into a couple of currency pairs. Okay. So my dollar index, I actually have the chart up here from a couple of weeks ago. We have a bit of a pickle right now in the US dollar index. And so here's what I think. We have a lot of support here from the last 3, 4, 5 years. This goes back to 2017 lows, 2018 lows. We are on, one of my favorite things about this is the left side of the trend line. This is the right side of the trend line. We are on the right side of the trend line. Everybody can see that pretty clearly, right? So if we're on the right-hand side of the trend line, here's what I think. We have this movement that I think is setting up some type of either a harmonic pattern that's going to be something bullish to the upside, or we're going to see this swing come back and set up some type of correction to challenge these lows and then have at least a range trade back to the highs, or this is a fake out to the downside and we end up going right back up and resuming this swing because we have a low to high break of the trend line, a higher low, and we end up pushing back up towards a higher high. Now, what's going to be interesting this week, if you're watching, we have a fresh month. We have new weekly targets. We have new monthly targets. We have news coming this week. It's a very busy week on the calendar. If you're taking a look at something like our economic calendar, okay, we have a super busy week. So here is, very quickly, our high impact stuff for the week. We have an RBA rate decision Tuesday evening, 12:30 a.m. Eastern Time. That's midnight, so that's going to be trading during Tuesday's daily trading session. We have employment news quarterly out of New Zealand. We have RBNZ Governor Orr speaking twice. We have ADP, which is a precursor to non-farm for the U.S. We have oil inventories. We have New Zealand here as ANZ Business Confidence. We have a rate decision out of the UK with the Bank of England and their Monetary Policy Committee. We also have unemployment claims on Thursday for the US. We have CAD and US employment on Friday. So a couple of things. Big number forecasted for Friday for the US, 975. Let's take a look at that really quickly. So we've had the last, 1, 2, 3, 4, 5 prints. 245 minus 140 plus 49 plus 379 plus 916. So again, I think for the last 12 months, the numbers have been pretty fudged when it comes to job reports, right? I mean, last year the US lost about 20 million jobs in about 2 to 3 weeks. COVID, economy shutdown, state shutdown, job market was never the same, and we're still easily $7 to $8 million shy, or 7 to 8 million jobs shy of where we were back pre-COVID in February 2020. Okay, but the fact that we have been at least going and trending in the right direction, 379, 916, this is only the last couple of prints. But we're starting to see positive revisions. Do I think that this Friday, can we come in with 975? Can we come in better than 975? Maybe. Okay. But one thing that we always have to watch, and there's always kind of a split with the US job numbers. What's the job number? What's the unemployment rate? And what are the average earnings? Okay. Because how many people are staying in the workforce? How many people are leaving the workforce? And those that are working, are they making more money? Right? Are wages increasing? Because right now it's like, okay, let's say that we're getting all these jobs. Well, a lot of them are just coming back again. These are jobs that have already been lost and they're coming back again, right? So we're still on the true recovery of we're just getting jobs back. We're not really creating new jobs. We're just recovering from last year still, right? A lot of these are in leisure, hospitality, travel, service. A lot of those jobs are coming back, which is good. COVID vaccinations. We're at the tipping point in the US where we're now sending vaccinations over to India or hopefully to developing countries that need it. India has 1 in 3 COVID cases right now. So anyway, a lot of news this week. It's typically a very busy first week of the month, and this is exactly that. In the Forex world, April and May, really important to understand there's something called a pre-summer push. Those are typically aggressive trending months for Forex. So looking at this currency, this is the dollar CAD, or this is the dollar index. Let me go to dollar CAD for a second, because I think dollar CAD is also lining up for a really good setup. And I have seen this one. I've been patiently waiting for this one. We're at 22.75, and we have just seen a recent, 7 to 8 day move to the downside. And this actually happened all with a Bank of Canada rate decision where they decided they're going to keep the rates the same at 0.25%, but they're going to start talking about tapering their stimulus purchases or their bond purchases, similar to what the U.S. did back in 2014-15 with Janet Yellen, as we're going to start looking to raise interest rates, tapering our bond purchases, and the Bank of Canada is starting to do the same thing. They're not looking at raising rates just quite yet, but they're looking at scaling back on some of those stimulus measures. And so the CAD has been a very strong currency pair, right? This also, after a 1, 2, 3, 4, 5 wave move, this is an 8-day, what looks to be a pretty strong capitulation move. So I know that I'm early to this trade because, again, I'll keep it really simple. Left side of the trend line, right side of the trend line. If we're not on the right-hand side of this trend line, all I'm doing right now in dollar CAD is if I'm buying it low, I'm buying it early, I'm buying it small. But ideally, what I want to see on this trade is if and when we break this trend line, okay, when we go from left side of the trend line to right side of the trend line, I'm looking to accumulate more over here and take it back up to this level. So I might be early. I bought some here. I'm patiently waiting. If it sets up another low, I'll probably buy there. If it sets up another low, I'll probably buy some there. I'm going to continue to level myself in very small, very conservatively on the left side of the trend line, which I know is early. But if and when I establish a position here and we get on the right-hand side, I can start to build a positive position. I can start to build a winning position that is way, way, way bigger than me just sitting in some small trades right now with a little bit of a drawdown. Okay, so it's one of my favorite setups right now. Now, pre-summer push could still favor the dollar CAD because we still have oil resiliency and we still have some dollar indecision. We're trading on oil at 64.40. Okay, now if you've been watching gold, watching silver, watching oil, watching copper, watching lumber, watching sugar, watching any of these raw materials, okay, it is a very ridiculous bull market out there for most of our raw materials. Copper is straight up. Lumber is straight up. I showed this today in my YouTube session. Look at this. I'm just going to go to lumber really quickly. This is absolutely insane. If anybody likes to look at charts, you look at this chart, you're like, what the heck does that even mean? Look at this weekly chart on lumber. We have gone up 100%, okay? Nearly 100% in lumber in the last month. 100% in the last month. That is nuts. Now, here's the reality. This is going to end badly, but All I'm saying is right now, I know traders that have been buying lumber's futures and just trading breakout after breakout after breakout. This is a weekly chart. If you're just buying breakouts, you're crushing it right now in lumber. Now, the reality is, technically, this should form some type of top. This should form some type of cup and handle. This should form some type of reversal pattern. And we should come back to this monthly target. We should come back to this previous high. We should come back to this pocket, this pocket, this pocket. All these demand levels that are available technically. Okay? But rather than calling the top, look at the technicals. And the reality is, if we have something that breaks out and goes higher, you can buy it. If it breaks out and goes lower, you can sell it. And so a lot of these raw materials are still very bullish right now. And unless we're running to April highs and helping form some tops and bottoms, May could be more of the same, or May could be the corrections and the much needed technical rebalancing. And that's what Tyson and I first talked about with something like Facebook, something like some of these, these our Master Blaster strategy for equities on demand, is we expect there to be a balance, right? You've maybe heard of the saying, reversion to the mean. If the market looks like this, where it is completely unbalanced, guess what? The market either goes up a little bit more and just ends up crashing just as hard, or we start to see the market, settle back down, and then correct a little bit, but we continue to go up. Or we see the market go up here, maybe drift a little bit more, maybe start to have a correction. Maybe it's a slow correction, but at least it shows us that the market's willing to balance a little bit. Let some of these averages catch up. Let some of these markets make some sense and find some equilibrium. Because without that, things are pretty broken. And with those broken things, look, traders can make a lot of money. Traders can lose a lot of money, because what happens is traders see this and they're like, I'm going to bet that lumber's going to go down. And then it goes up again, and it goes up again, it goes up again, and eventually it does come down. But if you can't afford to hang on to it that long, or you time it incorrectly, or you trade too aggressively, don't fight it. So again, we just talk about taking good trades, taking good setups, and not fighting the flow. So I'm expecting to see a pretty busy May. Oil, dollar CAD, I think are really good looking setups. I think this looks even better if the oil setup will break this trend line, and if we will respect this resistance. So if oil stays resistant around $66, $67, I could see oil giving us, a little bit of this. I'll just draw it out. So a little bit of this right here, or maybe it goes up, and then ends up dropping, right? That would be fine. It ends up dropping. I know my lines are all crooked there. But if it goes up here and then drops, makes sense. It's just a little range trade at equal highs, right? But as soon as we get on the right-hand side of the trend line, oil to me looks like a better sell trade. A much better sell trade on the right side of the trend line. So if oil is setting up for resistance, that means that the dollar CAD should be setting up for some support. Okay, so I think CAD pairs are going to be important to watch this week. I like the dollar CAD. I made some decent profits from Friday to Monday on the pound CAD. I just took a little stab at it end of day on Friday. We had a nice little jump today. The low was 69.58 and the high was 71. We went up about 160 pips on the pound CAD. So I ended up grabbing about 110 of those pips. It's not done yet. I think there's stronger support right down here. Stronger support right down here on the pound CAD, and I have my little Price Action Pro ready to pick up some buy trades. So I believe we have this one set up where if it is below 7,000, we were looking to get filled on that, and I'll have to check that tomorrow in my Flex Room. So long story short, we've got some great setups this week, this month. It's going to be a great month to trade. Okay, we should see some good volatility and expansions in stocks, but what Tyson and I are doing in Equities on Demand is we're doing it directionally neutral. We just know that the market is likely going to move, and we're trying to position our setup so it doesn't matter if it moves up or moves down, we can still make money, right? And that way we don't have to call the top and have to be, oh my gosh, I hope the market sells off, and we're like, we're going against the grain. Everyone wants to be a buyer right now. Everyone thinks that it's buy and hold and the bull market's going to go on and on and on, which maybe it does. So if it does keep going and it defies the technicals, then we'll make money. And if it actually does show that the highs are in and the market's going to start dropping a little bit and contracting and reverting to the mean, we'll make some money. So directionally neutral, good positions, buy low, sell high, low cost, high reward, stuff like that. And currencies, watch oil, watch the dollar index, watch lumber, watch copper, watch those ridiculous commodity pairs because they are nuts and those correlations are out of whack. And, again, we're going to see the market have a pretty healthy rebalancing, a pretty healthy, equilibrium. And but that we could see flash crashes. We could see greater capitulation moves. And so just be on the lookout for anything. So trade size small, be smart with your trade sizes, be smart with your entries, pick and choose your battles, buy at great levels, sell at great levels, and keep sticking to those technicals. Okay. All right, traders, I'm going to go and wrap it up there for today. Again, appreciate the thumbs up and likes for this. Subscribe to the MTI channel. Tyson, myself, Gary, Tad, Tion, our whole team, we obviously are coming in this session, sharing free education. We'll talk stocks, we'll talk options, we'll talk cryptos, we'll talk Forex. That's what we do. All right. If anybody's interested in learning more or wanting to get some information on that anniversary event, I have a recording of that. I'm happy to send that out. So if you're watching this, in real time right now, awesome. Happy to join you. Join us every Monday at 1 o'clock. If you're watching this recording, leave a comment, in the section. Leave a comment or in the description, leave a comment for the Market Traders channel, or you can find a way to contact us and email us. We have educational specialists. Again, email them asking for this anniversary event and get your hands on a nice 4-hour session. And you can see the segments. We have segments specifically on Forex, on stocks options, on cryptos, and some awesome, awesome content. All right, traders. Thanks a lot for joining us today. Happy Monday. Let's have a great week, great month, and I'll see you soon. Thanks. Bye.